Okay, guess we are live. So hello everyone. Okay, I'm just talking to myself at this moment, but well, it's my first live. I don't expect anybody to come, but if there's somebody else, or if there's somebody out there, welcome, no problem. Nobody. Oh wow. Okay, hello Jesse. secret record after loan paid off. Depends on what loan actually. If it's a personal loan or credit card, those unsecured loan is very fast. The next week you can ask the bank to remove it like few days to next week. If you are actually halfway applying the housing loan or anything, then it's blocking you, right? Like for example, also your credit cards, the bad debt, they can remove it in the next few days, next working days. If it's housing loan, you have to wait for the disbursement, which can take right up to for freehold, by up to about 3 months, and then if leasehold can take up to 6 months. So you not that being paid off. Yeah, if you sold the house, this is what you sold the house. If you pay off, as in you just go to the bank and pay off, and that one very fast. That 1 week is the fastest. If you pay off 3 months, yes, 3 months the fastest. If you sell the house and it's freehold, if you just pay off, then it's faster. You are actually in the midst of applying a loan, is it? And you want to get a 90%, is it, Jesse? Or refinancing? Refinancing shorter. Refinancing will be shorter. Oh, you're in the midst of applying housing loan now. Okay, okay. So that means you want to get 90%, but this is your second house, and then the bank still see your secrets got your housing loan, so it cannot give you 90%, correct? Give you 70%, correct? Okay lah, it's not very common lah, this one. Actually, actually you can actually you still can get 90% lah. You still can get 90% lah. You have to provide the bank with the proof that you have sold the house. You have proof that you sold the house, then it's okay already. You can get 90% for this loan. Uh Not I can lah. A lot of people ask me same this question before, so I know. So, but you have to be careful, because some of the banks, right, they insist on seeing it to be removed from the secrets, then only give you 90%. Some of the banks, they will require you to provide proof that you already sold the house, the loan, the house. So, what are the proof that you can provide the banks? You can provide number one, the new S&P. That one must be stamped. Then the redemption statement, no, redemption statement from the buyer bank. This one your lawyer will know what to give you. Then you can prove to the bank, then the bank will give you 90%. But most of the time, right, they can give you a 90% loan, but with condition. The LO will write there condition. That means they will put in this clause. You need to give the settlement redemption. I think the settlement letter, charge off letter or something like that. Oh, okay. Yeah, just provide the same. If it's refinancing, just provide the proof that you have already refinanced. You can ask that lawyer for the redemption statement, redemption statement, and also provide your current LO, the new LO from the bank, right? Just provide lah. That it should be enough to prove. But make sure you see the LO, because if they issue you, they usually have an additional clause saying that you must provide the full settlement document. I think it's a redemption statement before they even disburse the money. Before they disburse the money, so you need to pass to the banker. Congrats, refinancing. Not easy to get nowadays. Shouldn't be a problem lah. Good luck. Don't worry ah, yeah, small matter ni, small matter. One bank cannot approve, find other banks. So there's about 13 banks online in Malaysia. Small country, 30 over million, got 13 banks, no problem one. Yes, correct. You'll be pending the name to be taken off. Yeah, it's my first life. I actually don't expect people to come actually. I'm testing the system, see whether it's suitable or not. Thank you for coming, Jesse, and asking a question. Thanks for watching. Thanks for watching. Anything else that you want to ask? Anything else that you all want to know, perhaps you can let me know. So I will be more than happy to do. Yeah, I think Jesse, I think your question here, I should turn it into a video. It's a good question actually, because most of the time people ask me is their second house they sold off, then they buy the third one, the bank tell them they can only get 70%. Then they ask me refinancing. I think you are the first one to ask me. Thank you, thank you. Now it's a bit harder for me to actually keep to a schedule. So maybe I should put poll. Oh no, not necessary. Not necessary. Some banks still loan based on SPA amount. There's actually many reasons why a bank will cut margin. Yes, some of the banks, yes, they base on valuation price today because it's close to completion. Correct. But there are some banks still loan based on SPA. I think I know which bank you're referring to. Yes, correct. It's the depends on the bank's internal risk management, how much risk they are comfortable to take. You face this challenge recently, is it, Jesse? Okay. So you watch a lot of YouTube video mention how good is MLTA, okay? And maybe I should off the slow mode since it's only 1%. Yeah, wait. Oh, oh yeah, slow mode is only one. Okay lah. This is a very good question. If you clearly know that you're going to sell the house in 10 years' time, is it better to take MRTA? Hmm. It's a very good question actually, Jesse. But this thing is also something is very hard to for me to answer, which give you a blanket answer because MRTA and insurance is really something very personal. Okay. And we in general, right, you need as long as you know what you're doing with the house, as long as you got the risk covered, then it's okay. But to answer your question, is it better to take MRTA? Personally, right, I would I would say it depends because I don't know what's going to happen to me in 10 years time. That's the thing. To me personally, MRTA covers two things: death, total permanent disability. So are you sure these 10 years these two things won't happen? That is the question. If you want to use it for investment, right, because you're just keeping it for 10 years, right, I would suggest that you at least take MLTA just to cover it. MLTA just to cover the 10 years. After that you sell, because MLTA at least you cover, you be sure that you cover full and then you got extra. That is what I would do. And then you can buy MLTA now from some banks. Yes, actually MLTA, some banks do sell it, but it's very expensive. Huh? Of course, it's not as expensive as outside because in banks is one-time paying. And then the banks, some of them, depends on their risk appetite, will allow you to finance into the loan just like MRTA. So yeah, can take. Just want to share with you a story since you're here. I think 3 weeks ago already, I got a client who took a loan from me, like, which is about I think 2019 or 2018, I think. Suddenly I received a phone call from this lady. She told me uh, that her husband, who took the loan from me, actually met with an accident. So now it's a total permanent disability. Then the house that she bought for investment, this month just got keys. This month just got keys. So she wanted to claim the MRTT. The next question she asked me is MRTT going to cover full or not? The MRTT did not cover full because it was the house for investment. So, but at least it will cover a little bit, lessen the burden. Correct. The banks will make it requirement in order to give you a lower interest rate, correct? Because at least the risk to the bank is covered, lah. Okay. And the banks cannot force you, they can only entice you to encourage you. I don't want to use the word entice, encourage you to buy by giving you a low interest rate because you help to cover their risk, so they give you a lower interest rate. Want to buy a new house after doing refinancing? Congratulations. Now got a lot of good deals. 2.85 first 2 years and 3% subsequent years is good rate. Okay. Wow, quite good 2.85 first 2 years and 3 years, subsequent 3%. I think it's quite good. Market is about, I think the lowest is 2.8 at this moment. The one that I heard of is 2.8. But then I will caution you against going for the lowest rate because remember there's no free lunch in this world okay. The low interest rate, you might be hit with like clause behind that you don't know, like additional hidden charges you might not know. Okay, so be careful clause such as late payment penalty. Some banks, right, can be more lenient, 3 months, and then they increase your interest rate. Banker did not elaborate Of course you have to ask this one. Remember, there's no free lunch in this world. Uh actually most of us we just choose based on the lowest rate so I understand. But then when you get the lowest rate, right, behind there's always something let's just say I can give you a few examples. Number one is, let's just say, talk about late payment clause. Most of the banks, right, they got 3 months. Let's just say you are late for 3 months, then they increase your interest to about 6%. Last time 6% is flat. Okay. But there are some banks, if you are late for 1 month, they straight away go up to 6%. Okay, that's an example. Another one is fees, hidden fees. The moment you sign up, and then you got this admin fees, one-time admin fees, or maybe like you have to pay like other admin fees behind you that you do not know one, but it's inside the LO. No, is the bank will not like do it behind your back. It's always inside the LO. This is a fine print. That's why they give you lower interest rate, or they may tell you, okay, it gives you the most common one that you will see. Okay, this lowest interest rate now, you must take MRTA this much, certain amount of premium, then I give you this lowest interest rate. But this is the most common one. The other two that I mentioned above is hidden in the offer letter. So make sure you ask your banker first. There's no free lunch in this world. Make sure you ask your banker. This rate is good, but so what's the catch? Just ask what's the catch? All right. Or they make you hard to withdraw lor. Some banks, they like tell you, okay, we give you this lowest interest rate, but you want to withdraw, you have to give us like 3 to 5 working days, or they make you like pledge some money inside the account, or put FD, something like that lor. Then they give you this kind of rate. It's possible a lot of things they can change, so you have to ask what's the catch lah. Yes, correct. If you are actually an investor, I noticed that you have quite a number of properties you're going to invest, right? So what you can tell, right, is tell the bankers try to put a minimum for you. Most of us will understand. Okay. And we also try to and we are just cari makan ni takong cai, all of us so we got target one so if you want your loan to pass, like, just you help me, I help you lor, just tell us that you need minimum. If not, we won't know. We will just put the highest because we also got target. Welcome. Thanks for asking, Jesse. Good luck. Hmm. Come out here. Any more questions you would like to ask? Can, no problem. Oh, yeah, yeah. Banks, MLTA don't have those. It's not with the investment link one. That's why it's always a one-time, one-off payment. Is outside there you have an investment link. Actually, the term MLTA is, I would say, it's quite confusing. It's actually life insurance. Actually, those investment link life insurance. But maybe if I just use the word MLTA lah, it's easier to explain. Conventional MLTA that have fixed surrender cash value is not good. Or fixed surrender cash value is not good. Why leh? It depends on how I use it. Personally, if let's just say the house is my own stay, I don't have my own stay house at this moment. In my own stay, what I'll do is I cover with MLTA, and I'll take maximum amount and maximum sum assured and maximum tenure. I'll buy with the bank. Well, the reason being is that at least if I go, my house is still have to can pass down to my family, so they don't have to pay the loan anymore. But my investment house, that one I can cover minimum because as long as the rental is covering the installment. So both of these products, right, you can use it properly, use it to suit your own personal needs, your own personal insurance needs. Those with cash value, okay, what, like you, let's just say you use for investment, let's just say like your case 10 years, you buy for 10 years, then after at the end you get cash back, why not? I mean, what, you're going to sell the property okay, what, for those own stay one, I don't encourage that insurance is first and foremost is for protection, not something that you invest in. Correct, compared to those investment link type. My house is also rented one, so I can't. That's what I will do if I have my own house. This rented house also, MRTA also, I just take minimum money just to get a better rate. My minimum, I think 5 years, very little. Correct. The premium can be 10 times between MRTA and MLTA, correct? Because of the coverage also different. One the coverage is level, one is going down. Of course, the level one will be more expensive. And I highly encourage if level one you use for your personal, your own self, your own house that you stay. One thing when you plan this insurance, one more thing that you should take note is actually critical illness. You remember MLTA, MRTA that you buy from the bank. Most of the time, it doesn't cover critical illness. Hence, if let's just say you're faced with a critical illness, you still need to pay the insurance. It won't pay out. So you have to take this risk into account. And they do have riders. If the riders cover the critical illness also, you can ask the bank, see whether you want to include it or not, for especially for your own house that you own stay. Of course, the premium is more expensive, and also you might be subjected to a medical checkup before they even accept your case and cover. Welcome. So if there's nothing else, I think my live session is up already. Anytime, Jesse. Nice talking to you. Thank you for watching. Mm, okay, bye bye. Me too.